Hey everybody, it's James here, and in this video I have a very fast lesson for you. We're going to shoot for under 10 minutes here, which is a challenge for me. Before I jump into the content, hit the thumbs up button, subscribe to the channel, and of course, make sure to leave me a comment. That helps me out a great deal. So long story short, I took a break from social media, both Twitter and Facebook, and really YouTube for the most part, and it doesn't matter why I did that. It's a big long story behind it. But it comes down to this, the last post I made on Facebook, well, the second to last post, it got some pushback from a guy, and that guy was basically arguing with me on whether or not trading with rules works, and whether trading really is as simple as just looking at charts and technical analysis and things like that. And he's wrong. He said it wasn't. I said it was. And I'm going to prove why he's wrong, but it's not about proving him wrong. If I want to do that, well, I did do that day privately with him. But for you and for everybody watching this video, I want to prove this to you because you're probably overthinking this. If you're struggling, you are overthinking it. All right. So I'm going to prove this to you right now. Trading is about rules. Trading is not about emotion. Trading is not about being able to tell the future or predict the future. Trading is not, hey, I know more about this and I know like which projects are going to be successful and which projects aren't. Like that's all made up fairy tale stuff. Nobody knows which projects are going to be successful and which ones aren't. Nobody knows. Okay. But there are inefficiencies in the market that make technical analysis work. And when you understand those inefficiencies and when you know how to spot those inefficiencies, you can take advantage of it. It's a temporary inefficiency. The market is very, very good at filling in inefficiencies. When they open up, they quickly close again. And so what I try to get people to understand with trading is it's not about knowing where something is going. It's just about knowing at one precise moment where it's more likely to go in the short term. The short term being the key phrase. So let's look at this. This is a chart of the US 100. Back in June of 2022, I released a proprietary trading algorithm called the Racing Rabbit. The Racing Rabbit is an algorithm. If you Google algorithm, you will find out that an algorithm is literally just a set of rules, right? That's basically what an algorithm is. So like when you program an algorithm, you're just programming a bunch of rules, and then the system is checking to see if the chart matches those rules. That's literally all it is. There's no emotion involved in it. It's the exact same every time. Either it matches what it's supposed to match or it doesn't. Yes or no. Binary. Okay. So this is the US 100. This is a 4-hour chart. This chart, trading goes all the way back to 2017. So with absolutely no human input whatsoever, let's turn this indicator on and let's see how it fared over the last 5 years. Ding, it's on. Okay, buy, sell. Well, I think everyone would be quite happy with that buy around 6,000 and that sell around 7,000. Next, buy, sell. Again, looks like that sell is higher than that buy. It's 2 for 2. These rules seem to be working so far. Buy, sell. 3 for 3. Buy. And is that a sell right there? Sell. Oh, I don't know. Is that a loser? No, a tiny, tiny winner. Just barely. Okay, 4 for 4. Buy, sell. 5 for 5. Buy, come on. Buy, sell. 6 for 6. Buy, sell. 7 for 7. Buy, sell. Now this one, let's zoom in. This might have been a loss. Let's see. The sell would have been right on this candle. The buy would have actually been on this candle. Oh, it lost. There it was, batting 100, and it lost. Gee golly. Okay, but on a serious note, let's count this out, right? You have 1, 2, 3, 4, 5, 6, 7, 8 trades. 7 of them would have been winners. 1 of them would have been a loser, and this one would currently still be open. Now, no human input whatsoever. That's 100% algorithm based, 100% rule based. And I think that anybody that sees that would be very, very happy with the results. Just rules. You might think, well, James, I don't trade U.S. stocks. I'm not even in the United States. Maybe you're in a different country and you just say, I trade Bitcoin. Okay, here's Bitcoin, right? Let's go back. Funny thing about Bitcoin, number one, it's funny because the chart goes way further back than that stock chart did. This goes all the way back to 2015. Funny thing about Bitcoin is I would almost bet money, because I'm not sure if it's legal for me to do that or not. I would almost bet money that this algorithm out-traded most of the quote-unquote social media gurus when it comes to crypto. Most of those social media gurus are really nothing but gamblers who put money into a market and then watched it go up and got lucky. And it's the same reason that a lot of them who had so much money and who had made so much money lost it all in this bear market because they didn't know what they were doing. For example, the social media people who went out and said they lost all their money on FTX or most of their money or millions of dollars in FTX. Well, that's just a telltale sign of somebody that doesn't know how to trade. You might be saying, James, that's not bad trading. You can't control which site goes down. No, you can't. But you can control how much money you have on it. And proper risk management dictates you also have risk management plans for what's called systemic risk, meaning that you should never have more than 5 or 10% of your entire account on a site to begin with. Right? There's no reason to have more than that on there. You're not going to risk more than that on a single trade unless you're using bad money management. So why would you need to have more than that on there? You just use leverage, you use margin, which is a risk management tool when used properly. You can take the full size trades. If you got a $100,000 account, you keep 10,000 on there. You need to take a $200,000 trade. You just use 20x leverage. Not that big of a deal, right? But a lot of them, they didn't know what they were doing. They lost all their money. I would say this algorithm probably out-traded most of them. Look at this buy in October 2015 with a sell over here, buy, sell, buy, sell. Here's a buy down around $550 with a sell over around 2,500. Here's a buy, here's a sell, here's a buy, here's a sell, here's a buy, here's a sell. Right? Buy, sell, 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 buy, sell. So on and so forth. Here's a sell back in April of 2022, back around 45,000 or so before the huge dump, right? The algorithm just works. That's what it does. How about Ethereum? Some people don't like Bitcoin. They're Ethereum believers. That's perfectly fine, right? If you want to be an Ethereum trader, there's Ethereum. Now, again, rules. This is not, you notice I'm not doing anything. All I'm doing is pulling the chart up. I'm not changing anything. These are all default settings for a 4-hour chart. The 4-hour chart dictates these particular settings. I use the same settings on all 4-hour charts. Okay, put it on the log chart so you can see this easier. So buy, sell, buy, sell. Oh, look at that buy around $7. And it didn't give the sell out until around 250. Well, that's life-changing. Right? Buy, sell. Buy, sell. This buy was around 340. This sell was around 1,000 or so. Right before the crash. Here's a buy down around 400 or so, sell around 600 or so. These have been probably pretty close to even, maybe small losses on these. A buy down here around $100, sell over here around 150, buy right here around 150, right? Catches this big move, catches this big move, catches this move, catches this move, catches this move, catches this move, catches that move, right? Look at that. It was selling up here around $4,200. You had the gurus talking about Ethereum's headed to $10,000. Ethereum's headed to $25,000. No, Ethereum was headed for $1,000. The algorithm knew it. Why didn't they? Because they are trading off emotions. The algorithm is trading off of rules, right? That's actually probably a losing trade, this last one, because that sells actually. Yeah, no. Let's see. The buy would have been right there, and the sell would have been right there. So a very, very small win. But, I'm half making fun of those people, but I'm half not. It's just really frustrating and really sad to sit and watch people just, you try to talk reasonably to people and you try to talk common sense. I mean, the whole reason I called my channel Crypto Common Sense was I was trying to talk common sense. But common sense is just so rare in the world, and it's even more rare in cryptocurrency. But the reality is, I don't want to sound braggadocious, but guys, I've written algorithms that outtrade most of those people. And the reality is this. Rules work. Algorithms work. Simple systems work. Technical analysis works. Where you lose your money is when you get emotional. When you fall in love with your investment and you start ignoring reason and just, that's where you lose money. When you look at Bitcoin or Ethereum or any other asset as your lottery ticket that's going to save you from this life that you're not happy with, it's going to allow you to quit your job, it's going to allow you to, buy the house of your dreams, going to allow you to put your kids through college, whatever it is. When you start pinning your hopes and dreams to an investment, you are in deep, deep trouble because you can't see reason at that point. And I'm fully aware of the reason that my channel did not grow over the last year and a half or 2 years was because I was pissing in everyone's Wheaties, meaning that I was the sober guy at the party. People were pinning their hopes and dreams on these coins and these assets. And I was the guy saying, it's not going to happen. It's not going to happen. It's not going to happen. More than once, people told me, you're just being negative. No, I wasn't being negative. I was trying to save people. And I realized, this is one of the epiphanies I've had since, taking a break from social media. I realized that I had allowed myself and my own personal happiness to be too intertwined with the results of other people. And that watching other people go through hardships was literally depressing me and frustrating me and making me anxious. Like, how can I fix this? How can I fix this? How can I fix this? I'm not sure why it happened. It wasn't like I set out and did it on purpose. It's not like I was setting out to be a saint or anything like that. But somehow along the way, it became critically important, almost more important to me to save people than it did to make money. And so that's over. I'm done trying to save people. I will put facts out there. I will put reality out there. I will teach what is working. And if people want to use it, that is wonderful. If people want to join my programs and subscribe to my software, that's wonderful. I would love to have them. But for the people that don't want to, for the people that are negative and haters and trolls and all that, well, that's fine. I'm going to let them be haters. I'm going to let them be trolls. And I'm just going to take their money. Because that's what happens. People that don't know what they're doing just lose money in the market. And you have people like me, I'm there happily taking their liquidity. I'm happy to do it. Just like when I used to play poker for a living, sure, you would get mad when, what we would refer to as a fish. When a fish drew on you and put a bad beat on you, especially when they gloated about that bad beat, about how smart they were and how talented they were, sure, it stung. And sure, the ego was like, I'm going to get even with this little bastard. All that came to the surface, but the more poker that I played, the more I came to realize I needed the fish. The fish would pay you. Because sure, 1 out of every 20 hands, they might put a bad beat on you and take you for just a round number, $100. But they give you 10 and 20 bucks trying to draw on you the other 19 hands they played you. So at the end of the day, you'd win $400 or $500 off of them. Again, just using round numbers for easy math. And, they might take you for a $100 pot. Or like when I stopped playing poker altogether, I was playing higher limits, not high limits, but higher limits. And I remember one time somebody put a bad beat on me for $1,600 and they wouldn't shut up about it. I thought they were brilliant. They hit a 2-outer on me and just thought they were like the world's best poker player. And it's like, okay, yeah, he got me for $1,600 and yeah, that really hurt. But how many thousands of dollars had I taken off of fish like him before that? And the answer is many, Trading's the same way. For the people that don't want to learn technical analysis, for the people that want to sit and bury their head in the sand and say it doesn't work, fine, I'll let them. Because as long as they're longing into my shorts, they're providing me liquidity. And as long as they're shorting into my longs, they're providing me liquidity. And maybe it's not them specifically, that person against me, but it's people like them against people like me. And that's fine, If everybody was doing what I was doing, there would be nobody to take the other side of the trade. So... And I'm not saying that I'm the world's best trader. I'm not saying that I'm the only guy that's got this figured out. Obviously, that's not even close to the truth. I'm simply saying, in general, using me as one avatar and the other people as another avatar, you have the ignorant, which is, you can be ignorant. It doesn't mean you're stupid. It just means you're not knowledgeable. So you have the ignorant people who refuse to educate themselves, and you have the people who have taken time to educate themselves and have taken the trades. They have the experience under their belt to say this is what works. And I don't have to prove it works because you can see it with your own 2 eyes right there. You saw this. The algorithm did not change. I did not manipulate any settings. It just flat out works. So I'll go ahead and wrap the video up there. Obviously, I am just some guy. I am sitting in a spare bedroom. Nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. If you would like to get access to the Racing Rabbit or any of my other trade indicators or education, you can check the description. There will be links down there that share more information on that. All right, this is James with Crypto Common Sense, reminding you all, please trade safe, and that includes systemic risk. I'll talk to you soon.